Hello everyone, welcome to EduTap and welcome to today's Finance 360-degree session. So today we are going to discuss a very important notification of the Reserve Bank of India, where the Reserve Bank of India has introduced the scheme of incentives and the scheme of penalties or the penal interest for the banks. Okay, so this master action is applicable for all the banks, and such kind of master actions, they become important if there is any change that has happened or if there is a new scheme that has been brought by the Reserve Bank of India. Okay, so this we are going to discuss. We have already discussed the scheme of incentives, and today we are going to focus on the scheme of penalties or the penal interest, the important data point we are going to discuss. Okay, so first of all, give me a thumbs up if I'm clearly audible and the screen is visible. So hello Akshu, good morning Kashish. So good morning to all of you. So today we are going to discuss the scheme of penalties and the penal provisions, the penal interest rate, why they are imposed, how they are imposed. All of this we are going to discuss. Okay, so let's get started. Give me a thumbs up if everything is fine. So now, before moving forward with the topic for today, do subscribe to the YouTube channel of EduTap so that you continue getting the relevant videos, and do join our Telegram channel where you will get the PDF of the session. And the link for the Telegram channel is provided in the description box below. So the PDF is usually provided within 24 hours. Okay. Now, starting with the master action, see, the RBI has formulated, and under this master action, the RBI has provided a scheme of incentives to encourage the banks for setting up requisite currency chest infrastructure and facilitating the distribution and exchange of notes and coins, so that the soiled notes can be reduced from the public domain, as well as the mutilated notes can be reduced from the public domain, and the clean notes can be provided to the public, to the members of public. Further, the RBI has also prescribed a scheme of penal interest or penalties in order to ensure that accurate and timely reporting of currency chest transactions happen with the RBI, as well as provision of proper customer service is provided to the members of public, so that the bank branches and the banks with the currency chest, they provide the proper customer service to the members of public, okay, by the currency chest branches and the ATMs of the banks. So the scheme of penal interest or penalties is applicable to all the banks in order to ensure that all the banks, they provide the accurate and timely reporting of the currency chest transactions and the provision of proper customer service to the members of public by the currency chest, by the bank branches and the ATM of banks. So this is the basic idea. Okay, now what is the currency chest? This we have already discussed in the previous session, that the currency chest, it facilitates the distribution of banknotes and rupee coins on behalf of the Reserve Bank of India. So RBI has authorized select scheduled banks to establish currency chest. Okay, so there are certain banks that are the scheduled banks, they are authorized by the Reserve Bank of India to work as the currency chest also. Okay, so they are basically the currency chest, they are basically the tijori from where the other bank branches in the nearby area, they can access the banknotes. Okay, these are storehouses. So currency chests, they are the tijori, they are the storehouses where banknotes and rupee coins are stocked on behalf of the Reserve Bank of India, because the Reserve Bank of India has the core function of currency management and maintaining the money supply in the economy. Okay, so this is the idea, that the currency chests, they are expected to distribute banknotes and rupee coins to other bank branches in their area of operation. Now we have started the session, we have started with the scheme of incentives, and we have discussed the scheme of incentives in the previous session, where we discussed the RBI scheme of incentives for the banks. Okay, so there we have discussed about the currency chest in detail, where we have discussed about the mutilated notes, the definition of the soiled notes in detail. So now let's proceed with the scheme of penal interest or penalties. Okay, so in the previous session we have already discussed the short title of the master action, as well as we have discussed that this master action is applicable from when the notification is released, as well as we have discussed the applicability of the master action, that is on all the banks. Basically, we have discussed the definitions of currency chest, mutilated notes, soiled notes, and all the other important definitions we have discussed. We have discussed the scheme of incentives. Now in today's session, first we are going to discuss about the penalties for deficiency in rendering the customer service. So starting with this, so in order So basically, in order to ensure that all bank branches they provide proper customer service, the bank has formulated the Reserve Bank of India. Bank means the RBI has formulated a scheme of penalties for bank branches, including currency chest for deficiency in rendering customer service to the members of public. So basically, this is the scheme of penalties that we are going to discuss. So let's get started. Now the data points will be provided to you, and I will inform you that how you can keep these data points in mind. Okay. So first of all, we are going to discuss the penalties for the bank branches for deficiency in rendering customer service. So for all the bank branches, these penalties will be applicable if they have any deficiency in rendering the customer service, such as below. So deficiency in service in providing the exchange facilities as dictated by the RBI officials. So if the RBI officials, they see that the bank branches they have the deficiency in service, they are not issuing the coins to the member of public even when they have the stock of coins. If the RBI officials see that their bank branches they are not accepting the lower denomination notes in their deposits, and they are refusing the bank branches, if they are refusing to exchange soiled or mutilated notes or imperfect notes tendered by any member of the public. So this is the idea. So if there is any deficiency in service by the bank branches, either they are not issuing the coins even if they have the stock of coins, if they are not accepting the lower denomination notes, if they are refusing to exchange the soiled notes or mutilated notes, in any of these cases, the penalty will be applied on the bank branch which is having the deficiency of service, 10,000 for any deficiency of service, and 5 lakh rupees in case there are more than 5 instances of deficiency in service by the branch in a calendar year. So in 1 year, if there are 5 instances of deficiency in service, then there will be the 5 lakh rupees that will be levied as penalty. So the levy of such penalties shall be placed in public domain. So that means public should be aware that which banks or which bank branches have been penalized. Penalty shall be levied on the immediate basis. So 10,000 rupees for any deficiency of service, but if there are more than 5 instances of deficiency in service, then 5 lakh rupees will be the penalty. Okay. Now here you can see point 3. So refusal by any bank branch sees the small finance banks up to 2 years from the commencement of their banking business, and the payment banks they may exchange mutilated or imperfect notes at their option. So that is the idea. Okay. Now coming to the next point, that is counterfeit notes detected in ATM dispensations. So let's say that this ATM belongs to a particular bank, let's say XYZ. Now in the ATM, there were counterfeit notes, that means fake notes that were detected, that were found. So if the counterfeit notes are detected in the ATM dispensations or disbursement over the counter, the bank branches over the counter in their bank branches, they are disbursing the counterfeit note, or there is willful non-impounding of counterfeit notes detected at the banks. The banks, they are willingly, they are not seizing. Willfully, they are not seizing or not impounding the counterfeit notes. In any of this case, a monetary penalty of 10,000 rupees per instance shall be imposed for the counterfeit notes that is detected in the ATM dispensations, disbursement over the counter, or the willful non-seizing, non-impounding of the counterfeit notes detected at the banks. Even the white label ATM operators, that are the non-bank ATM operators, even in this case also, this same thing will be applicable. The same penalty will be applicable if there are counterfeit notes that were detected in the ATM dispensations. So the monetary penalty of 10,000 per instance will be applied. This is the idea. Okay. Now coming to the next one. So we have discussed about the penalties for bank branches for deficiency in their services. Next is penalties for ATM cash out. ATM cash out is basically you went to the ATM, the ATM is working, but the cash is not available in the ATM. Okay. So non-replenishment of the ATMs, that means non-replenishment of the ATMs with the cash. So there is cash out that is happening. Cash is not available in the ATM. Even though the ATM is fully functioning, there is no problem with the ATM, but still there is cash out in the ATM. So cash out at any ATM of more than 10 hours in a month. So in 1 month, if there is the cash out of more than 10 hours, this will attract a flat penalty of 10,000 per ATM. This shall also be applicable to the white label ATM operators also, that are the non-bank. ATM operators. Okay, so this is the idea. So banks and white label ATM operators, they are required to submit system generated statements regarding ATM downtime caused due to non-replenishment of cash. So because of the cash out, for how many hours, for what time the ATM was down, the ATM was not functioning because the cash is not available there. Okay, so this kind of system generated statements have to be provided to the concerned RBI issue office under whose jurisdiction the ATMs are located. So basically, if a bank branch or if a bank has the ATM, or if the white label ATM operators, they have a ATM where the cash out has happened and the cash out is more than 10 hours, or the cash out is more than 10 hours in a month. So in this case, these bank branches, these white label ATM operators, they have to submit a system generated statement regarding the ATM downtime that was caused due to non-replenishment of cash. This reporting is applicable only for those ATMs where the cash out exceeds 10 hours. And this kind of statement has to be provided to the concerned RBI issue office under whose jurisdiction the ATM is located within 5 days of the following month. Okay, so this is the idea. Now coming to the penalties for deficiency in operations of currency chest. We have discussed about the penalty for deficiency in the bank branches for the customer service. Now coming to the penalties for deficiency in operations of currency chest. So these penalties will be levied particularly for the currency chest. And remember that the currency chest, they are authorized by the Reserve Bank of India for their functioning. Okay, so the bank branches, there are certain banks that can have the currency chest. So they operate their normal functioning also, they do their normal functioning also, as well as they are also handling the currency chest business, for which they earn some extra service charge also, okay, for which they earn some extra money also. Now if the RBI has authorized the currency the bank branches with the currency chest, then these bank branches, they also have to follow certain additional norms. Okay, there is the memorandum of agreement that has happened. As per that, the currency chest has to follow certain guidelines as per RBI. Okay, so now penalties for deficiency in operation of the currency chest. Basically, if there are shortages of notes in soiled note remittances, currency chest, they are sending the soiled notes to the Reserve Bank of India, so that the Reserve Bank of India can provide the clean notes against these soiled notes. Okay, because the RBI will provide the clean notes to the currency chest against the soiled notes. So now it has been found that the currency chest informed there were 1,000 soiled notes, but the RBI found that no, there are only 900 soiled notes. Okay, or the denomination is different basically. So if there is shortages of notes in the soiled note remittances that have been sent to the Reserve Bank of India, and if there are shortages of notes and coins in the currency chest balance, so currency chest balance, in the currency chest there are shortages in notes and coins. In this case, what will happen, that there will be a penalty for notes in denomination up to 50 rupees. So 50 rupees. So if there are shortages of notes in soiled note remittances, or if there are shortages of notes and coins in currency chest balance, so for notes in denomination up to 50 rupees, if they are lacking, or if there are shortages in the denomination up to 50 rupees, so 50 rupees per piece, this will be the penalty plus the loss that has happened. So let's say 10 rupee notes, they have been lost, plus so the 10 rupee is the loss amount and the 50 rupees the penalty. So this much, 60 rupees, let's say, the bank will, the currency chest will have to provide to the Reserve Bank of India. So this is the idea, that for notes in denomination of 100 rupee and above, see this example, that for notes in denomination of 100 rupee and above, in this case, the equal of the value of denomination per piece in addition to the loss. So loss, let's say loss has happened of the 100 rupee note, and the penalty is also 100 rupees. Okay, loss has happened for 200 rupee note and the penalty is rupee 100, is 200. So this is the idea, equal to the value for notes in denomination of 100 rupee and above, equal to the value of denomination. The penalty will be equal. The penalty will be equal to the denomination, as well as loss amount has to be paid. So here the example is given, shortage of 200 pieces. 200 pieces of rupees 20, they are missing. So that means this is the loss value, this is the loss that has happened. So loss amount has to be paid by the bank, as well as the penalty for each piece. For each piece, the penalty of rupees 50. for each piece, for each 200 piece. So this much has to be paid. So this is the recovery or credit, recovery of loss. So 20 rupee 200 pieces have been lost. So this is the loss that has happened, and this has to be recovered by the RBI from the banks, and the penalty amount is 50 rupees for per piece. This is the idea. So I hope this is very much clear that for notes in denomination up to rupees 50 per piece, this is the penalty plus the note denomination. This has to be paid. Okay, the loss has to be covered. Okay, for notes in denomination of 100 rupee and above, so whatever is the loss, so that has to be recovered, and whatever is the denomination, let's say 100 rupees is the denomination, so that has to be recovered, plus the same penalty will also be levied per piece. This is the idea. Now for coins in all denomination equal to the value of the denomination per piece in addition to the loss. So let's say the 10 rupee coin is missing, plus the equal amount of penalty will also be applied. Okay, same as denomination. So for the coins, if they are in shortage in the currency chest balance, so equal the penalty will be equal to the denomination, as well as the loss has to be recovered from the bank. So the recovery of loss and levy of penalty shall be done immediately on detection of shortage, irrespective of number of pieces. Now here penalty as above. Let's say that there are shortages of 100 rupee notes by 5, but there is excess of 200 rupee notes by 2. So it has been found that okay, the loss has been recovered to some extent, that 500 rupee is the loss that happened because of the shortage of 100 rupee note by 5 numbers. So 5 pieces of 100 rupee note, they are in loss, so or they are in shortage. So that means 500 rupee is in shortage. The excess rupee 200 rupee note is in excess by 2. So that means 400 rupees is in excess. So that means the loss is somewhat recovered, and only 100 rupees is actually the loss, actual loss that has happened. So the value of excess shall be adjusted against the loss amount at the time of recovery, but the penalty will be applied on all the notes that have been lost, that have been in shortage. So basically usually what happens, that the loss amount has to be recovered as well as penalty is applied. Okay, the loss amount has to be recovered and the penalty is applied. So the RBI recovers the loss amount as well as penalty is applied. But in case the excess notes are available, so against the excess notes the loss will be recovered, but the penalty will still be applied. So if 5 notes have been in shortage for the 100 rupee notes, so for them the penalty will still be applied even though the loss has been recovered through the excess notes. This is the basic idea. Okay, any confusion, anyone? Next is, so here we have discussed the basic idea. Read it once again so that you can keep the important information in mind. For notes in denomination up to 50 rupees, the penalty is 50 rupees per piece in addition to the loss. Loss is always the denomination of the currency or the banknote that has been lost. Okay, so the for notes in denomination of 100 rupee and above equal to the value, the penalty is equal to the value of the denomination per piece in addition to the loss that has been happened. Now next is counterfeit notes detected in soiled note remittances. That means currency chests are sending the soiled notes to the RBI for their replacement with the clean notes, but it has been found that certain soiled notes, they are counterfeit fake notes. So if the counterfeit notes are in denomination of 5 rupee, 10 rupee, 20 rupee, then there is no penalty that is levied, only the loss is recovered. That means if the fake note, if the counterfeit note is of rupees 5 in 10 pieces, so rupees 50, that is the loss that will be recovered by the RBI from the currency chest. So recovery of loss to the extent of notional value, that is the face value of counterfeit note. So there is no penalty, there is no separate penalty, only the loss will be recovered by the Reserve Bank of India. Okay, denomination of 50 rupees, so a penalty of 50%. So in the case of denomination of 50 rupees, a penalty of 50% of face value. Let's say 50 rupee, there were 50 rupee one note that was missing. So penalty will be 50% of the face value of the note plus the loss has to be recovered. That means the 50 rupee this has to be recovered. Okay, so this is the idea. A penalty of 50% of the face value of the counterfeit note in addition to the extent of recovery of the face value of counterfeit note. So 50% of face value, this is the penalty, plus the 50 rupee, this is the recovery of loss. Similarly, denomination of 100 rupee and above, in this case there will be a graded penalty. Okay, 100% of the notional value will be the penalty, or the 150% or 200%. So there will be a graded penalty on the basis that how many counterfeit notes, how many fake notes have been found in the per million pieces of soiled notes. So per million pieces of soiled notes, in the per million pieces of soil notes, if there are counterfeit notes per million pieces of soil notes, it is less than 5. So 100% of the penalty will be levied. 100% of the face value of the counterfeit note, this will be the penalty that will be levied in addition to the recovery of loss. That is basically the face value only. Okay, if let's say in the currency per million, in the counterfeit notes per million of the soil notes, they are more than 5 but less than 20. So in this case, 150% of the face value, this will be the penalty. In addition, the recovery of loss the RBI will do. The RBI will get the money of the face value also. Okay, so this is the idea. So if the denomination of 100 rupee and above, these are the counterfeit notes that are detected in the soiled note remittances. So a graded penalty will be levied on the basis of the counterfeit notes that have been found per million pieces of soiled notes. Okay, so RBI will be recovering the loss. RBI will be recovering the loss that, okay, 100 rupee was counterfeit note. So 100 rupee, this is the recovery of loss, plus penalty has to be paid for the counterfeit note. That will be, let's say one piece has only been found in the counterfeit per million soil notes. So that is the counterfeit notes per million is less than 5. So 100% of the notional value of the face value, that is 100% of rupee 100. This is the idea. So penalty is 100% of notional value, face value of the counterfeit notes. If the counterfeit notes per million is more than 5 or equal to 5 or more than 5 and less than 20. So in this case, 150% of the notional value of the counterfeit notes, this is the penalty. Counterfeit notes per million is more than or equal to 20. So 200% of notional value, 200% of the face value, 200% of the face value, this is the penalty, plus the recovery of loss in addition to the recovery of notional value, face value of the counterfeit notes. This will also be done. Got it? When the notes have been found, immediately, like it was written here also, na, the recovery of loss and levy of penalty shall be done immediately on the detection of shortage irrespective of number of pieces. Okay, so when the detection has happened, as soon as the detection has happened that, okay, counterfeit notes are there in the soil note remittances done by the currency chest, so currency chest is sending the soil notes to get the clean notes from the Reserve Bank of India, but there are certain counterfeit notes that have been found. If the counterfeit notes are of small value, so they are difficult to identify also, and that's why the RBI is saying that, okay, there will be no penalty, but you will have to, the currency chest will have to pay the recovery of loss. Okay, the currency chest will have to pay for the denomination of the notes that have been lost. For the denomination of 50 rupees, there will be a penalty of 50% of the face value of the note plus the face value of the note separately. So if the note is of 50 rupees, the face value plus 50% of face value, 50% of 50 rupees, that is 25 rupees. But if the denomination is of 100 rupee and above, the counterfeit note should have been identified, and in this case the penalty is levied, and with that there is the recovery of face value that should also happen. So recovery of face value should happen, plus there is some penalty that is also levied, and this is a graded penalty as it keeps on increasing with the number of counterfeit notes per million soil notes. Now coming to the next one. Counterfeit notes detected in currency chest balance during inspection or audit by RBI. So if the counterfeit notes have been detected in the currency chest balance, that means in the currency chest, in the vault, if it has been identified that there are certain counterfeit notes that have been found. In this case, if the counterfeit notes are of denomination of small value, 5, 10 or 20 rupees, then there is no penalty that is levied, only the recovery of loss to the extent of face value of the counterfeit note. Okay, but if the counterfeit notes in the balance of the currency chest, if the counterfeit notes are of denomination of 50, so a penalty of 50% of the face value of the counterfeit notes in addition to the extent of recovery of the face value. So again, the same thing, that 50% of the face value, this is the penalty, and the recovery of loss will be equal to the denomination of the note that has been lost. Denomination of 100 rupee and above, so a penalty at 200%. So directly here there is no grading or such. If the counterfeit note has been detected in the currency chest balance, directly a penalty of 200% of notional value. So penalty of 200% of the face value of the counterfeit note in addition to the recovery of loss of the face value, if the denomination is 100 rupee and above. Okay, next is mutilated notes, including deliberately cut notes and built up notes detected in soiled note remittances and currency chest balances. So if the mutilated notes, they have been found, currency chest is sending the soiled notes to the RBI. In the soiled notes, if the mutilated notes have been identified, or if in the currency chest vault the soiled note, the mutilated notes have been found. So in the currency chest balances, in the currency chest vault, or if in the soiled note remittances the mutilated notes have been found, so 50 rupee per piece, irrespective of the denomination, in addition to the loss. So 50 rupees per piece, this will be the penalty plus the recovery of loss, or in addition to the loss. Okay, so this is the idea. For the mutilated notes, if they are found in the SNRs, in the soil note remittances and the currency chest balances, so 50 rupee per piece, this will be the penalty. Directly in the amount terms, penalty has been given, no denomination, no face value here. Directly 50 rupees will be the penalty plus the, in addition to the loss of the mutilated note or whatever denomination the mutilated note was in. Okay, so this is the idea. Recovery of loss and levy of penalty shall be done immediately on detection, irrespective of the number of pieces. Next is non-compliance with the operational guidelines by the currency chest. I have told you that the currency chest, they have been authorized by the Reserve Bank of India. So there are certain proper guidelines for the currency chest to be followed. Non-compliance with the operational guidelines by the currency chest detected by the RBI officials, that means there is non-functioning. Currency chest, it is the vault that is carrying the money of the Reserve Bank of India. It is carrying huge amount of money that has to be sent to the different bank branches. You can understand that if the CCTV is not working, if the operational guidelines are not being followed by the currency chest, that means it can be a major loss that can be seen in the long term if there is any attack or something that happens. Okay, so non-functioning of CCTV, non-compliance with the rules guidelines pertaining to CCTV, branch, cash or documents kept in strong room, that is currency chest vault. I have told you that the bank branch, it has been authorized by the Reserve Bank of India. So the bank has been authorized by the Reserve Bank of India to work as the currency chest. But the bank is also providing loans. It is also taking the deposits from the public. So currency chest operations should be separately done from the loans and the deposits and the other functions of the bank. Now, if certain documents of the bank branch, they have been found in the currency chest, that should not be there. So bank branch cash or documents without having the proper records, if they have been kept in the strong room in the currency chest vault, so that is wrong. Okay, non-utilization of the note sorting machines, you must have seen if you have gone to the bank branch to deposit your money, there is a note sorting machines. Okay, for sorting out the notes. Non-updation of note sorting machines, if they have not been updated as per prescribed standards, then also this is non-compliance by the currency chest. Okay, non-conduct of surprise verification of currency chest balances at bi-monthly intervals by officials unconnected with the operation of currency chest. So it has been laid down in the operational guidelines by the currency chest of the Reserve Bank of India. So in the operational guidelines of the currency chest, it has been laid down that the bank members or the bank employees of the different branch or of the same branch that are not connected with the operations of the currency chest, they must conduct the surprise verification of the currency chest balances. If the surprise verification is not happening, this is also non-compliance. So if in any case there is non-compliance with the operational guidelines by the currency chest, penalty of 5,000 for each instance of irregularity GST, penalty shall be enhanced to 10,000 in case of repetition or recurrence of irregularity in consecutive inspection cycles or earlier. Penalty shall be levied immediately. Now next is violation of any terms of agreement with the Reserve Bank of India. I have told you that the currency chest, they sign a memorandum of agreement with the Reserve Bank of India as they are holding the money of the Reserve Bank of India. So violation of any terms of agreement with RBI for opening and maintaining the currency chest as detected by the RBI officials in their inspection, or denial of facilities or services linked to the linked branches. So currency chest has the responsibility to provide the banknotes and provide the coins as per the requirement of the bank branches that are linked with the currency chest. So this comes under the linkage scheme, where the different bank branches of an area, they are linked with the currency chest. If the currency chest has denied the facilities or services to linked branches of other banks, so this is a violation. Detection of by RBI of mutilated build-up counterfeit notes in reissuable packets prepared by the currency chest branches to further issue it in the public. So in this case also, this is a violation of terms and conditions with the RBI. So 10,000 for any violation of the terms of agreement, and 5 lakh rupees in case there are more than 5 instances of violation of terms of agreement by the currency chest. Any confusion here? Next. So this is any confusion? So we have discussed the third chapter also. Now moving forward with the fourth chapter. So just the basic idea you need in the fourth chapter, important points we'll be discussing. Any confusion, anyone? No confusion? Chalo. So penal provisions. Now we are going to discuss the penal provisions in reporting of transactions or balances. Till now we have discussed the penalties for the bank branches for deficiency in rendering customer service, or penalties for ATM cash out, or penalties for deficiency in operations of currency chest. Now we will discuss that what are the penal provisions in reporting of transactions or balances. So in the reporting with the RBI, if there is delay that is happening, if there is any misconduct that is happening, so how that will be penalized. So let's understand this. So penal provisions for reporting of transactions or balances at the currency chest. So reporting procedure and all we are going to discuss. Next, minimum transaction amount. First of all, the minimum amount of deposit into or withdrawal from currency chest shall be 50,000. So the linked bank branches that are linked with the currency chest, they can deposit their money with the currency chest, or they can withdraw the money from the currency chest. The minimum amount of deposit or withdrawal from currency chest shall be 50,000, and thereafter in multiples of 10,000. Okay. Reporting timelines. The currency chest shall invariably report all the transactions through the currency management currency chest portal on the same day by 7 p.m. That means on the daily basis. On the daily basis, the reporting has to happen to the Reserve Bank of India. So the currency chest shall invariably report all transactions that has happened in one day from the currency chest through the currency management currency chest portal on the same day by 7 p.m. Okay. Now, currency chest reporting in currency management currency chest portal on Sundays or holidays. In case currency management currency chest portal is available on the specific day when the currency chest is working, is operating on a local holiday, let's say, the currency chest shall report the transactions through the portal on the same day by 7 p.m. Let's say that this is a nationwide holiday. The nationwide holiday is happening, global holiday is happening, second or fourth Saturdays of the month or Sunday, in which the currency chest portal is not working, is not available on the said day. In this case, the currency chest shall report the denomination wise consolidated deposit withdrawal by 7 p.m. to the concerned issue office of the Reserve Bank of India through email, and report day's transactions in currency management currency chest portal on the next working day. That means on the daily basis, anyhow the currency chest has to provide the reporting. If the currency management currency chest portal is not available, then the mail has to be sent to the concerned issue office of the Reserve Bank of India on the same day by 7 p.m. and by the next day the update should happen in the portal. Okay, so this is the idea. Next, under the business continuity plan, basically it has been said that let's say that because of any connectivity issue or technical issue, because there are currency chests in the hilly areas, in the far off areas, so if the currency chest is facing any connectivity or technical issues, in this case the bank's back office, so the currency chest is belonging to a bank, let's say State Bank of India. So the bank's back office, the State Bank of India back office administrator can temporarily map the user ID of another currency chest with the same bank to carry out transactions on its behalf. That means the currency chest. Now the State Bank of India has been authorized by the Reserve Bank of India to carry out currency chest operations, or the SBI has been authorized with the currency chest operations. Okay, so State Bank of India has a bank branch in Northeast, that is a currency chest, and the State Bank of India has a bank branch in Gujarat, let's say, with the currency chest. So it can be done that if a currency chest is facing connectivity or technical issues, the bank's back office administrator can temporarily map the user ID of another currency chest with the same bank to carry out transactions, so that the Gujarat bank branch currency chest can operate on behalf of the Northeast, or not Gujarat because it is very far off. So let's say in Sikkim, the issue is coming. So from Assam or from the local area, if in the Sikkim in a particular area the issue is coming, so from another area of Sikkim the issue can be handled. Okay, so this is the idea. So this is the business continuity plan that has to be provided. So under the business continuity plan, the RBI allows flexibility in using the currency management currency chest portal. Okay, so now let's continue. So next is nature of irregularity. Okay, I hope this is clear. If there is any problem, if there is any issue, kindly inform me so that I can clarify. Under the business continuity plan, the RBI allows flexibility in using the currency management currency chest portal to ensure uninterrupted reporting by the currency chest. So if a currency chest is facing issue, so from the same bank, the another currency chest can carry out the transactions on its behalf. Once the transactions are completed, excess rights must be restored to the original currency chest. That is the idea. Now coming to the next one, delayed or wrong reporting of the currency chest transaction. If there is a delayed reporting or wrong reporting, in such event of the delayed or wrong reporting currency chest transactions, penal interest at the rate of 2% plus the bank rate. So this is, the bank rate is currently I think 5.5%. So whatever is the bank rate plus 2%, this is the penal interest rate. This is the penal interest. Okay, so in the event of delayed or wrong reporting the currency chest transactions, the penal interest at the rate of 2% over the prevailing bank rate shall be levied on the amount that is due from the currency chest for the period of delay or till the date of receipt of corrected advice by the Reserve Bank. So basically, if there is any delay or wrong reporting that is happening, the currency chest has to provide bank rate plus 2% of the penal interest rate. Okay, the interest shall be calculated on the day the transaction has happened and the reporting has not. This is the idea. Now next is penal provisions for reporting for levy of penalty. Okay, so soil note remittances, if they are sent to RBI, they shall not be shown as withdrawal from the currency chest. So if the withdrawal is happening from the currency chest, so that means the actual money has been withdrawn. Okay, so withdrawal by currency chest, so it shows that the amount has been withdrawn, the new banknotes have been withdrawn. Okay, so the soil note remittances, they shall never be shown as withdrawal by the currency chest, because the currency chest, when the withdrawal is happening, that is basically from the currency chest, new banknotes are being withdrawn by the bank branches. Okay, so that is withdrawal from the currency chest. From the currency chest, the bank branches are withdrawing the money. But in the case of the soil note remittances that the currency chest is sending to the Reserve Bank of India, if the currency chest is sending the soil note to the Reserve Bank of India, this is not withdrawal from the currency chest vaults. Okay, so soil note remittances sent to RBI shall not be shown as withdrawal by the currency chest, as this is not withdrawal by the bank branches from the currency chest. In such case, if the reporting of soil note remittances to RBI is shown as the withdrawal from the currency chest, a flat penalty of 50,000 shall be levied irrespective of the amount that was involved. Okay. Next is reporting of diversions. Diversions usually happen when the currency chest, they are leading to cash, like cash transfers. Okay, so diversion is basically the transfer of cash from one currency chest to another currency chest in need. So to maintain the regional balance and to handle the regional imbalances, if the currency chest requires more money, so from one currency chest the cash can be transferred to another currency chest also. So all the currency chest diversions of the cash transfer, both between the currency chest of the same bank or between the currency chest of the different banks, they have to be reported through the diversion module of the currency management currency chest portal, that from this currency chest the money has been sent to another currency chest. Okay, from the Sikkim currency chest, the money has been sent to the Assam currency chest, or from the local region, from one local region of the Sikkim currency chest, the money has been sent to the another local region 2 of the Sikkim. Okay, so this is the idea, that if the currency chest, if divergence is happening, if the transfer of cash is happening, so that has to be reported properly. The currency chest sending the diversion should initiate the entry, and receiving currency chest should acknowledge the same. Diversion should not be reported as deposit or withdrawal, and in any case of any such wrong reporting, see, the money is just being transferred from one currency chest to another currency chest. The bank branches are neither depositing the money, the other bank branches, the linked bank branches, they are not depositing their money. The bank branches, they are not withdrawing the money. So actually from the currency vault, the money is not being transferred to the linked bank branches. Just from one currency chest, the money is being transferred to another currency chest. Okay. So in case of such diversions, currency chest diversions, in case of the cash transfer to the another currency chest, it has to be reported as a diversion only. It has to be reported as diversion only. It cannot be reported as deposit or withdrawal. But if the reporting of diversion is happening as deposit or withdrawal, a flat penalty of 50,000 will be levied. Okay, this is the idea. Now coming to the last point, that is delayed reporting where currency chest had net deposit. Let's say there is delayed reporting or wrong reporting where the currency chest transaction, see, if the delayed reporting is happening or the wrong reporting is happening, the bank rate plus 2%, this is the penal interest that is levied. Okay, in the case delayed reporting is happening where the currency chest has net withdrawal from the currency chest, the money has been taken out, and then there is a delayed reporting from the currency chest, the bank branches have taken, the other bank branches, the linked bank branches has taken the money. So there is net withdrawal, the amount has been withdrawn in the net amount from the currency chest. In this case, if the delayed reporting is happening, then the penal provisions will be levied, bank rate plus 2%. But let's say the delayed reporting is happening, the delayed reporting of currency chest transaction where currency chest had net deposit. They actually have got more deposits, more money from the bank branches. From the linked bank branches, the currency chest has got the net deposits. In this case, the penal interest rate will not be allowed, will not be carried forwards. So in the case, the delay is happening in the reporting, but the net deposit, the delay of the reporting has happened, but there is the net deposit. Okay, so in this case, there will be a flat penalty of 50,000 rather than having the bank rate plus 2% of the penal interest rate. There will be a flat penalty of 50,000. So if there is a delayed reporting of currency chest transaction where currency chest had net deposit, had more money from the bank branches, a flat penalty of 50,000 rather than bank rate plus 2%. This is the idea. Now coming to the last points, operational guidelines. This is your last chapter, last point from this article. Kashish, I will answer. Akshu, I will answer when the topic finishes. Okay, it is just going to finish. So operation guidelines, competent authority, the officer in charge of the issue department of the regional office of the Reserve Bank of India, under whose jurisdiction the defaulting currency chest, bank branch, ATM is located, is the competent authority to determine the nature of the irregularity and impose the applicable penalty. Okay, so competent authority will be penalizing or will be imposing the applicable penalty. The controlling office of the currency chest or bank branch may appeal against the decision of the competent authority to the regional. So there is the right that is given to the currency chest to the bank branch to appeal against the decision of the competent authority. So the controlling office of the currency chest or the bank branch may appeal against the decision of the competent authority to the regional director or chief general manager or the officer in charge of the regional office concerned. Within 1 month the appeal has to happen. Okay, now the appeal should not be done. The appeals should not be done. Let's say that okay, the staff was lacking, the staff was new. In such cases the appeal should not be done, because if your staff is lacking, then it is your responsibility to train them. If the staff is new, then you should have trained them better. So RBI has basically said that appeals for waiver of penalty made on grounds such as staff being new, untrained, lack of awareness, corrective action have been taken or shall be taken, shall not be considered. The RBI will not be considering such kind of appeals. Appeals will only be considered, appellate authority will only consider such appeals where the representations are on account of genuine difficulties faced by currency chest, especially in the hilly or remote areas and those affected by the natural calamities. Then you are saying that the cash out happened in the ATM, that was a genuine reason. Natural calamity has happened, no ATMs can be filled at that point of time. Or let's say there is a reporting delay that has happened because of the natural calamity. So yes, that is a genuine reason. So only for the genuine reasons the appeal can be made, not for such kind of reasons. Okay, so this is the idea. Now what are the questions? Do we have to remember all the number? We have to cram everything. See, I will suggest you some points that how you can remember the data. In the case of penalty for bank branches, 10,000 is the main data that you have to remember, and the 5 lakh. Okay. Next, when it comes to the ATM cash out, 10,000 is the data. Okay. Then when it comes to the nature of irregularity and shortage of notes in soiled note remittances and coins, so you have to remember the important points that okay, 50 rupee per piece in addition to the loss, or for notes in denomination of 100 rupees equal to the value of the denomination. Okay, this is the penalty plus the loss. So these kind of important data you have to remember. This is same as this one, just in the 100 and above. Here the penalty at 200%, this is the flat, but here there is the graded penalty. So counterfeit notes detected in soiled note remittances and the counterfeit notes detected in currency chest balance, so they are mostly the same. Mutilated notes, flat 50 rupees penalty plus the loss that has happened. So here 10,000 rupees, 10,000 rupees, 5,000 rupees. So these are the important data that you have to remember. At one go, when you are just studying this, the data might seem very difficult, but if you read it twice, you will see that okay, the data is recurring in nature and you are able to remember it easily because the data is recurring. Okay, so that is the important idea. Again, for the penal interest, it is bank rate plus 2%, and the penal interest usually is kept by the RBI, bank rate plus 2%. If we are talking about the penalty, not penal interest, if we are talking about the penalty, that is 50,000. Okay, so these are the important data that you will have to remember. Chalo. Now this is the first question. I hope you will be easily able to answer this question. Consider the following statements regarding the penalties for deficiency in customer service. A penalty of 10,000 per instance is imposed for deficiency in customer service. A penalty of 5 lakh is imposed if there are more than 5 instances in a year. Penalty is imposed only if ATM remains out of cash for more than 24 hours in a month. So which of the above statement is or are correct, that you have to tell. Okay. Next question is regarding counterfeit of 100 rupee notes are found in remittances sent by a bank to RBI, sent by the currency chest bank branch to RBI, and the counterfeit notes per million is 25. What penalty applies? Okay. So here the counterfeit notes per million is more than 20. So what penalty will apply, that you have to tell. Chalo, this is it for today. I hope you enjoyed the session. If there is any confusion, you can write down below. And yes, I was getting a lot of query that why the SEBI articles are not being covered or the other finance current affairs are not being covered. I take the monthly revision session. So the important SEBI articles, important other finance current affairs will be covered in the monthly revision session, as well as only the finance current affairs, the general finance current affairs, they are more important from the last 3 months before the examination. So even the month of notification, let's say the notification comes in July, it's June, and your exam is happening in July. So June, April, May, June. These 3 months will be important. So yes, this month I will take certain sessions on the SEBI articles also, finance current affairs also. But before that, you do not have to do 9 months of the finance current affairs. Okay. And we are only focusing on the most important articles right now. Chalo. This is it. Thank you everyone. Thank you for joining. See you in the next session. Next